By looking at examples on the video and analyzing especially the proximity group in the power chart and the trend red, green, gray lines in the trend chart, those are the two primary charts that we look at for gaps. But there's a lot of supporting evidence in the other ones. We love to see the price red and green high above the blue. Above 120 is great. You can go down to 100. You can even be lower. I mean, sometimes it's real low, depending on the setup. But typically you see it. It's great when it's up above 120. This example I have is an example of a trend of a long green candle, and I'm in LMAT, and this is April 26th, 2017. And I have here in the trend chart a sky touch. Trend red is high above green, and it's basically 3 days up. Trend red is at 33, green is at 19. It's almost 20 and it's almost 34, so it's 14-point difference. That's significant, and that usually generates greater activity when you have a significant separation between the red and the green. It's just exposing more power in the movement that's taking place prior to the movement occurring. We're expecting a gap here, but we get a long green candle. It opens on this long green candle the day after the vertical green line at 26.57 and closes at 31.86. So it looks like it's going up over $5 during the day. And as a result of that, we can take a gap or you can take a long green candle. They both work the same as long as you hang on to them. But in the power chart, we have all 6 lines in a moving up, and they're all above the power orange line, with power red highest and power yellow the next highest. And with that, we have a few different patterns. Some of them are in a 3-day up, like the pink and the blue and the white. And the power Zion is a little bit different in that it is in a BOC higher pattern. And there are a few others like that. The other thing here I'll point out is that zip green's at 100 and pink is right under it. This is day 1 of the zip green. This next day movement often happens on day 1 when zip green hits 100. The first day that it hits 100 is what I'm trying to say. Also, we love to see it when zip Zion is highest on a opportunity that we're looking at. Swing Zion is highest, and we know that swing Zion is what? It's the price barometer, along with zip pink and the 3 price lines, and that tells us that the price is moving higher. And that doesn't mean that it's not going to go down the next day. What we're establishing is that it's been going up. It may continue. We're looking for the evidence to prove it. And so the swing Zion is just a contributing factor. We're at the highest point right now. Will it go higher tomorrow? The evidence indicates more than likely, okay, because of what we're seeing. We have in this case here, if you look at the power green, it's at 0.53. Power orange is at 0.46. So you got 0.07 separation between green and orange, with green above orange, and both above 0, as well as the short term, as well as the trend trio is above 0, and likewise swing red and green. So you have all 7 short-term trend lines above 0, which is very advantageous. In this case, it's a little bit different in the trend chart. Sometimes you'll see trend gray being high above the red and the green. In this particular case, trend gray has gone down under the 0 line, spiked down in a divergent move, which 2 days later has caused a huge green candle. On the vertical line day, the open was at 25.72 and the close is at 26.38. So it looks like it's about a 70-cent body on that candle. And the reason I say that is because I want to point out to you that on the day before, if I move this line over 1 on each, keep in mind on this day right here, price green is 118 and red's 116. Going back to the other day, it's 139 and 132. So we love to see it over 120. On this day here, we have a red spike in the zip chart. We also have zip pink highest, which means price is moving up, which is a good indication. Likewise, zip Zion is moving up at a low angle. And we have, like I say, we have a red spike right here, which tells us that the following day it's likely to be good. We have swing Zion that's highest. We have swing pink in a high right leg W. We have gray down under 0 on this day. We have power red down under 0. Zion is a down touch 0. The key thing with Zion is that it is under orange, and the power 4 lines, pink, blue, yellow, and white, are all above power orange. And another factor is power yellow is highest. All of these things are things that typically happen when you have a gap up. So on this day right here, I would have been fooled and thought that this would have been a gap day. It looks really good. It looks strong. I wouldn't have hesitated to take this, especially when I see swing pink. It has a head and shoulders pattern right here, or a triple bottom. You can see the triple bottom in the zip chart. Boom, boom, boom. It doesn't exist in the price chart, so you know that there's not enough strength to create the triple bottoms. It's because it's moving up. And so likewise, we see a W in the trend red, but not the third point. We see a falling in power red. We see a falling triple bottom, which again is indicative of a reaction that would move us back up strongly. But this day here, I wouldn't have had any trouble picking this out as a position to buy long. And because why? Because trend red and green, trend red they're both in the sky touch position. They're trend red's at 13, green's at 9. That's only a 4-point separation, and maybe I wouldn't have seen it in time, or maybe I would have picked it up the following morning. But in any case, with all the 7 short-term trend lines above 0, I more than likely would have picked this up, and then toward the end of the day saw what I had then I probably would have invested more in it at that point, and then had the opportunity to capture a $5 price up move on the big green candle day. So that's in a nutshell about what's happening with that particular movement. They're easy to see. You just need to look at the evidence. There's oftentimes a lot of supporting evidence. There's even though the proximity group, primarily the power 4, has 7 patterns that it falls within, the patterns also have general locations, like the divergence between Scion and the power 4 being above or under the power orange line. and together all in one above orange, or together all under orange. Sometimes Zion is down while the others are up. That divergence causes, I mean, think about it. When one indicator is telling you that things are going down and the other indicator is telling you that things are going up, you've got a situation here where the forces are reacting, and there's going to be a blowout. And it's in a strong candle, large candle, or a gap. That's just literally what happens. When you spot that divergence, that's key. There are dozens and dozens of ways that things can be divergent. You'll see that in many videos, and you'll see that in comments just within a normal video that you might not anticipate it being at. So it's great information. Think of those candles that we saw. They were pretty much all flat for 10 days before that happened, and you couldn't see triple bottoms or head and shoulder patterns in the candles, but you sure could see them in the indicators. And that's the secret. The heart of the entire system is built on those 22 MFR indicators. It took us a long time to put those together, and they've been paired and synchronized, and they work well together. And so we're excited. We hope you are too. There is no other system like what we've got. Day Trading Visual Basics is the best system on the planet. And believe me, it's always more important for you to have a system that picks the selection that you make. I mean, I've said it before, what's more important, the stock you pick or the